Okay, now we're here. This is where all the secrets lie. This is what will turn you into an oracle when it comes to stocks, coins, any type of trading. And you're going to be surprised at how simple this is. Because it is simple. And I have boiled this down after a long time down to these three indicators and how to use them in the greatest way possible to create amazing predictions that are going to tell you what your next move is. And we're going to get started right now. So first things first, how do I start? I have a workflow. Like I said, I prefer to have a workflow. My workflow starts at the bottom and I work my way up. That's why I like the stochastic at the bottom, RSI in the middle, MACD on the top. Now, like we talked about before, the stochastic is a moving average oscillator that looks at the previous highs and the previous lows over an extended period. So it's giving you a very accurate look, more so than a normal moving average. And it's going to give you incredible buy and incredible sell indicators. What you are looking for, if you want to be a safe trader, is you want to be looking for buy indicators that are extremely strong on the Stoch. You want to be looking at your other indicators to indicate, yes, this is correct. This is what is happening. And then you want to follow along from there. So let's start. Let's look at some buy signals. We'll look at some sell signals just so you get an idea. So if we take a look, let's start right around here, this range right here. This seems like a good range because we had an up, we had a down, we had a little bit of everything. So if we're following our Stoch and it's coming along and we get to this point, we can see here the blue. The blue is our positive indicator. You can see it dipping down. And then just before this candle went green, just before it crossed the orange line. This is a very good buy indicator. The reason why we know it was a good buy indicator was because if you think of up here like a clock, if this is pointing at 12 o'clock, 1 o'clock, or 2 o'clock, you have a very good buy indicator. Now, the closer it is to that 12 o'clock, midnight type hour, the better that signal is. Now, as we come back and we see this, we can see it starting to weaken, which would be concerning, but we don't get concerned generally until we see a cross. And this is usually on the second candle here. Now, you can see these coming from a mile away. Like we can see here, even on the green day before it probably even closed, we can start seeing a trend here. We can see a trend. We can see our cross. It wasn't a strong cross, and you can see that by an almost dragonfly doji in the red. So meaning not much movement. It did drop, it did recover, but it's a bearish sign. We can see that this has dropped below. So if we had been swing trading this, we would have sold up here or here. We've been watching here. We're watching the positive line drop down, flatten out, and we're starting to see a good 2 o'clock cross here, which is telling us that we have a buy signal. We get the golden cross right on the day of the green candle here, and we have the positive moving up. So we are always looking for these crosses. A downwards cross is a sell sign. An upwards cross is a buy sign. Now, we need to be able to confirm this in at least two other places. So we are going to be looking at here. We can see that it's matching the RSI. We have an upswing here. So that's 1, 2. And we have a growing buy pressure. Even though it did weaken the first day, it is still growing on the second day. And it's coming up. So this is telling us we have a buy. And then we're starting to see it reverse right away. So This tells us we're probably going to be in a position to sell again. Right here, we have a cross, comes down, coming back up. We have another golden cross here. So we're looking for the RSI to match. Look at the increase in buy pressure. And by the end of the day, look what the candle did. Now we start seeing downwards movement again as we come into this little dip. And we just follow that same trend again. Now we got an upwards, and it's going up, and then it's coming back down. Now, remember what I said. You need 3 indicators to say the exact same thing. Now we have one indicator here that tells us this candle will probably close red. We have 2 indicators telling us the same thing as the RSI is dipping. But here's the important thing. We don't have a third. This is not a closed candle, so we can't use this as an indicator. So we have to look at the MACD on the histogram. This is telling me that most likely by the end of this day, the candle will flip to green. We're going to see this give us a false indicator and pop back up. RSI is going to do the exact same thing. This is why most people fail with RSI trading. They try and trade the bubble, the ins and outs and ins and outs, and they are just missing the confirmation. There is more happening than just the RSI. We have to look at the Stochh, we have to look at the RSI, we have to look at the MACD. Now let's look at an extreme case. Okay. We're going to kind of zoom out because everything in this is super, super duper extreme. There we go. Just going to zoom in here. So this is when we saw the downtrend. This was the very end of the summer downtrend. When was that? End of July, beginning of August, I believe. Yeah, end of July. So we had a major downtrend that we saw. And we can start seeing that buy indicator very early on. In fact, the day before this candle goes green, we have our buy indicator. Now, this is important to see here. You can tell that there was days that struggled, but if you see a very weak cross like this, where it's barely breaking down, like it's not pointing at 6 o'clock, it's pointing at 3 o'clock on the up, or this is a very weak signal. Those very weak signals are what we call false indicators. So we can ignore all this and realize that we're continuing an uptrend. We're going to continue, up all the way up until we hit a correction. And when we hit that correction, on that day, we get a very good, strong sell signal that tells us the market's going to go down for the next couple days. We see it flatten, really good cross again, and continuing to move up. Now, once again, looking at this, we have to look at all 3 indicators. This says down, this says sideways, and this says that sell pressure is weakening. So this is saying down, this is saying I don't know, and this is saying no, I'm getting stronger. Most likely on this day, this candle will close green. Now we can assume that at this point because we don't have any accuracy telling us that it's going to move down. If for whatever reason we saw the RSI continue to dip and we saw sell pressure continue to increase, which right now it is not, we would be able to say for sure that we're going into a downtrend. We would get a good solid cross, but right now this just looks like it's going to be a false indicator at this point. I hope this makes sense because this is very powerful. Very, very powerful. Going back to BTC, I just want to go over it again. I'm just going to keep hammering this so that you guys get it. So we are looking for very, very, very strong indicators. We want our predictions to be correct and right and be able to make action on it, knowing with full confidence that we know what we're seeing. So let's look at this dip right here. We had a downwards cross, a little bit weak, but continued sell pressure. You can see the sell pressure getting stronger and the buy pressure getting weaker. Here we go. RSI is also saying we're going down, going down, going down, going down. Now we have a reversal. We're going to start seeing our upswing here. We have a golden cross. Our RSI matches. Our MACD, even though in the red, is getting weaker on the selling pressure, which means it's going to flip to higher buying pressure. And we can continue to see that rise until we see that cross back down again. Now remember, there will be false indicators and there will be very close calls. You can see this candle right here. This candle here is called a doji. That means that there was not much movement up or down on that day. It could not decide what it wanted to do. And you can see here that created a very close to a cross. Very close to a cross. But it didn't actually cross. So what we're really looking for here is really strong signals. This right now looks like it could be very strong. And maybe in a day, maybe 2 days, we might see a downtrend. But right now, this is not matching this and is not matching this. So we know that this is a false indicator. Most likely, we are going to close green for the day. Now, if they had all matched with extreme accuracy, then we would be looking at a downtrend. But they are not matching whatsoever. So we have 1, 2, but not 3 indicators. Remember, rule of threes. 3 is accurate, 2 is speculation, 1 is nothing. This is very, very important. Now, how do we put this into play with strategy? And this is important. Whether you're just buying to accumulate or getting ready to sell and take profits, you need to know what the market is doing. I do not expect you to be swing trading right away. I do not expect you to even necessarily be fully comfortable with this right away. But what you need to do is look for your moments on when to buy and when to sell. So if we see a movement like this, where we're down, we're starting to pivot back up, this would be a great time to buy a token or a coin. So if you want to take a position on, say, Shiba Inu, or you want to take a position on Saitama, or something like that, if you're on their charts and you are seeing this indicator, you can buy. This is a very good time to buy. This here gave us 1, 2, 3, 4 days. 4 days indicating not to buy yet because it was going to keep dipping. This was telling us buy it. It starts moving up. We've now bought the low and we are now riding up. Now, if you were to get ready to take profits, you don't want to do it here. You don't want to do it here. You want to do it up here, right at the top. And what you're going to do is you're going to watch the indicator. We can see there's a big gap here. Big gap, big gap, big gap. Oh, starting to close a little bit. We can probably start thinking of taking profits. And we can make our sell order here. We can make our profits. We can use that to reposition back at the bottom if we want. We can use that to, pay some bills. We can use that in any way we see fit. But what we're looking for is these indicators. We need to make our decisions based off this indicator. Does this match this, this, and this? Do we have all 3? Yes, this all makes sense. We're going to continue our downtrend. Okay, we are now seeing a reversal of that downtrend. We're going to buy, weakening, we can buy. So we got all of our indicators lining up, and we're going to move upwards. So you've now bought the dip, you can sell the high, and now you see how incredibly powerful that something like this is. Now, if you were swing trading, you need to know that you only swing on the strongest of signals. You need at least 18% in the dip, and you're looking for about 20%-ish on the rise. And the reason why is you need to pay your fees and you need to make profit. We'll go into that when I go into a swing trading course, how to spot those big dips, how to spot those movements. But for now, this is your key to being able to make good, solid predictions going forward. This works on every token, every coin, pretty much on everything. On the newest coins, the only one that doesn't work is the RSI. So we are bringing ourselves down to only 3 possible indicators. And in that case, what we're doing is we're using the candle as the third. And only when we see 3 that match do we know what to do. I hope that makes sense, that the accuracy comes from the 3 indicators working together, the 3 indicators being set up properly. Now the RSI and the Stochn stay standard. It comes out of the box this way. The only one you have to change is the MACD. You're changing that to 821 close 5. Really, anything this works on. Quickly, we can take a look at USD versus CAD. So this is like Forex. You can see here, we have these exact same indicators. Ooh, bad dip coming. But you can see this works for Forex. This works for stocks. This works for cryptocurrency. This system works. You can put your trust in it. I trust it. This is exactly how I make my predictions based off charts. Now there's a bit more to this in the strategy because we're going to go look at the next step. But this is everything you need to know about charts. Congratulations. You can now do technical analysis and be accurate. And next, we're going to bring in social sentiment. And we're going to be able to tie all this together to once again create a very, very strong understanding of what the markets are doing. And more importantly, what the big players, like institutions, want to have happening right now. So all in all, this is incredible. I hope you understand it. If you have any questions, do not worry. There's going to be the live seminars where you can ask questions. You can always reach out to me. If you need a one-on-one session, we can make that happen. But as for the chart part of the strategy, you are now done. You are enlightened. Start tracking your trends. And you know what I would say? I would say if you're looking to swing trade or do something like that, take a month. Look at the trends. Follow them on your charts. Look for those golden crosses on the stochastic. Confirm it on the RSI and MACD. And write down how many times you're accurate, how many times you lose your trade, how many times you win your trade. And when you start getting up to about 80-90% accuracy, that's when you start trading if you want to swing trade. But I hope this all made sense. And if I have to go into it in more detail, I will update this section. There's no question. But this is pure chart magic. I hope you guys enjoyed that. And we'll look at social sentiment next.